This fund has beaten its benchmark by 28% in just over a year. Today, we will discuss why this multi-cap fund from Motilal Oswal did so well, how it's constructed, and more importantly, whether its high valuation should worry you. But there is this one data point which will completely change how you see this fund. We will get into that in a minute. First, let's always start with comparing the fund with its appropriate benchmark. So here we are comparing this multi-cap fund from Motilal Oswal to Nifty LargeMid250 Index. As you can see, in over like 1.4 years is the history of this fund, right? It got launched 1.5 years back. It has completely beaten its benchmark, and the excess return that you would have generated is quite high. It's 28%. And if you see the total returns, right, in over a year, it has generated a total return of close to 40% here compared to its benchmark, which has generated a mere 8.9%. So let's get on to how this fund is constructed. So you can see that this fund is a multi-cap fund, right? So it should have a large cap, mid cap, and also small cap. So here it's almost equally distributed, right? So it's 31%, 36% to mid cap, 31 to small, and 32 to mid cap. So almost equal weightage to different market capitalizations that you have. Finally, we will get into some of the risky side of this fund. The first is the number of holdings that it has. It has about 20 holdings, which is more concentrated and which is on the extreme end of a very concentrated portfolio, right? And when you go through its holdings, especially the top 10 holdings, right, you can see that the top 10 holdings sums up to 81%. So basically, you're investing 80%, 81% of your money in just top 10 stocks, right? So one thing that you have to get to know about this fund is that it's very concentrated and it has beaten its benchmark in a very short time frame, right? So 1.5 years for a mutual fund, it's not a proven track record, right? So it's a very short time frame that we are talking about. The next thing that I want to focus on is its valuation, which is another concern. So one concern is that it's too concentrated with just 20 stocks. Another concern is the high valuation, right? So you can see when you compare this fund to its just like a broad market, right, like a Nifty 50, the valuation, the PE ratio, right, the price to equity ratio is on the extreme end. And to be more precise, right, so if you look at the PE ratio, it's almost twice or even thrice Nifty 50, right? This is almost trading at 80x multiple compared to Nifty 50, which is trading 25x multiple, right? So this is almost like a ticking time bomb, right? Like high valued, you're basically buying high valued companies by getting into this fund, which is another risk that you need to be aware of before analyzing this fund. And as we already saw, it's concentration risk, right? That you are concentrating most of your money in just 20 stocks, as you can see here, compared to, if you're looking into a very broad, let's say a large and mid cap 250 fund, like which is the benchmark that we saw, right? It has about 250 stocks in its index compared to just 20 stocks in the Motilal Oswal multi-cap fund. Finally, what I want to focus on is comparing this fund with its peers, right? So I've taken the top four multi-cap, like large multi-cap funds in India. So over the last, again, very short time frame we are talking about, since June of 2024, it has completely beaten its peers by a huge margin here, right? So you can see the performance itself. There's a wide range, and you can see the other funds, that is, no Aditya Birla, Nippon, HDFC, and Mahindra Manulife. They are almost like behaving in the same manner when you compare it to Motilal Oswal multi-cap, which is on a different like when you take just the performance, right? It's generated much more returns than its peers. But this is again another thing that I want to focus on is the number of stocks in this fund compared to its peers, right? So if you see the peers itself, almost every fund, every multi-cap fund has more than 90 stocks here, right? So this one has 81 stocks, this one has a lot more stocks, right? HDFC has 244 stocks. And when you just focus on the Motilal Oswal multi-cap, it's just 20 stocks, which again you need to be aware of because it's a very highly concentrated portfolio. Highly concentrated portfolio comes with its own risk, right? Because you're just focusing on 20 companies, right? The reason to look into any mutual fund is that you don't need to take single stock risk, or we don't know which stock is going to do well. But here you're just buying into just 20 companies, right? Which is too much of a concentration that you need to think about before looking into this fund. But one thing that I need to show again is the valuation, right? Compared to all the other peers, the P ratio for Motilal Oswal is still on the higher end, because if you can see that all the other peers like the Aditya Birla or Nippon, right? It's almost like 40x, right? When you compare this is like trading at 80x, right? Again, compared to its peers, um, it's trading twice the PE ratio, which another risk that you need to be aware of. So what we saw in this video is about a very concentrated uh, fund, a multi-cap fund with just 20 stocks. Most of them are very highly valued, as you can see when you compare it to its benchmark and also when you compare it to its peers. It's highly valued. We also saw the how this fund is constructed. So it's 30 equal weighted to all the all the market cap, that is small cap, mid cap, and large cap. And also the top 10 stocks sums up to 80% of the weightage in this fund. So these are some of the risks that I wanted to highlight by comparing this fund with its peers as well as the benchmark. I think that brings us to the end of the video. If you are a mutual fund distributor or a financial advisor or any professional investors in India, I think Phenomenal, we have built a suite of tools that is the best in the market. It's not just said by us, it's also used by a lot of our customers and also said by a lot of our customers, right? So if you're someone who's want to analyze portfolios, wants to analyze mutual funds and ETFs and stocks, and wants to get in-depth analysis, and more than the analysis, right, you're doing more a valuable thing for your clients, in terms of like finding the best fund, in terms of reducing the expense ratio, in terms of diversifying your portfolio. We provide solutions to all of them using our analytics. So go to phenomenal.com and check out all our tools. Thanks a lot for watching. I will see you with yet another interesting fund next time. Thank you.